Good morning, it's 9:16 and you're listening to Market Watch on the Morning Run. We've got Lee Tian Xiang, Senior Research Analyst at Fund Supermart Malaysia, here for a look at the retail sector. Good morning, Tian Xiang. Now, what has been the impact of GST? It's been slightly more than a year now.
Well, if you look at an economic point of view, it was probably a good timing for the government to actually introduce GST 1 year ago, especially when the international oil prices fell heftily. So previously, Malaysia, they have been relying heavily on oil and gas-related revenue. And even though the proportion has declined over the year, right, it still makes up almost 20% of the government's revenue. So I think right now, fortunately, the introduction of GST has helped to mitigate this issue. So it allows our nation to actually diversify its sources of tax revenue. So if you look at last year, GST collection was at 27 billion ringgit. So it's higher than the estimate RM 18 billion that will be collected under the SST tax system. So unfortunately, I think that this measure is a bane for consumer because this actually contribute to increase in prices of goods, and this might not be good for the retail sector.
Okay, so, I mean, when we talk about the retail sector and its performance, we have to talk about GST. But what are some of the other factors weighing on the retail sector?
Yeah, I think aside from GST, we are also seeing upward adjustment in terms of the utilities as well as the transportation fees such as toll rates as well as railway fares. So I think all of these have actually caused the cost of living to rise, and as a result, consumers' disposable income has actually shrank, and this does not bode well for the retail sector as well.
Okay, so if we were to gauge the performance of the retail sector last year, if you could do a comparison, say, between consumer staples and discretionary.
Yeah, I think if you look back at 2015, analysts were actually not optimistic on retail sector. So this is especially true for those that are involved in the discretionary goods and services. So if you look at their earnings number, earnings for consumer staples are actually down by 16.7%. But if you take a closer look at consumer staples, then you realize that all these earnings downgrade are because of the plantation companies. But if you look at the consumer discretionary numbers, then you'll find out that the earnings are not looking good last year. They have been adjusted down by negative 26.9%. So this is expected because consumer disposable income has shrank and they have lesser money to actually spend on big ticket purchases as well as discretionary items.
Okay, so has that pessimistic view on consumer-related sectors continued for 2016, for this year? Are there specific companies that you are keeping a close eye on?
Yeah, actually, I agree with belief that the retail sectors will still continue to be under pressure. So in inflation rate, they are expected to trend higher, and this will follow with higher cost of living. So we expect companies doing consumer discretionary, such as car dealers, as well as mail and store operators. They might be continue to face headwinds going forward. But if you look at their numbers, right, they have actually contracted negative 1.9% last year. And in contrast, we see minimal impact on consumer staple since most of the staple goods are actually GST exempted and they have a low price elasticity of demand.
Okay, well, what about mall operators? I mean, as a proxy to the retail sector, are you still pessimistic on mall operators for this year?
Actually, we are not. I think more operators, they'll still be under pressure because if you look at the current spending environment right now, they are not looking very good. So I think for more operators, they will still continue to be haunted by gloomy spending environment that persists till today. So if you look at last year, more operators have seen lower than expected earnings, and they also witnessed lower shopping traffic. So I think for 2016, they will continue to be a challenging year for them. So we are actually 3 months into 2016, and if you look at the number, analysts have actually downgraded their earnings by an average of negative 11%.
So, Tian Xiang, are you seeing a glut in net lettable area for shopping malls? I mean, I don't know why, but I still keep seeing new malls being built, mushrooming up everywhere.
Yeah, I do think that there's an oversupply of mall space at this juncture, especially in the urban areas. So if you include the upcoming huge supply of new malls, so that will be built 3 to 4 years down the road, then definitely the saturation of shopping mall industry will definitely go higher. So I think with retail spending remain constrained, right, it actually remains a major concern whether these mall operators will be able to sustain their operations going forward. I think those well-known names might be less impacted, but it might be tough for those newer shopping malls to actually manage their shopping mall industry, shopping mall operations going forward.
I've been speaking to Lee Tian Xiang, Senior Research Analyst at Fund Supermart Malaysia.